Hello, I'm Sarah Allen and welcome to Livewire's Fund in Focus. Today, I'm joined by Matt Hout from Wilson Asset Management. We're going to talk about WAM Leaders, which trades under WLE on the ASX. Matt, welcome.
Thanks for having me.
So to begin with, can you talk me through the philosophy behind WLE and how you invest?
Sure. So WLE is an ASX 200 fund. The way we invest is really using top-down approach, but also a bottom-up approach. So combining the two, we think that gives us the best chance of success in our investment. So the way we break it up is we have a framework where we look for a macro lens, a fundamental lens, and then a liquidity lens, and which is the liquidity is around positioning. So we just combine those three factors to make sure we're putting money into the portfolio where it's going to work, and then we adjust the portfolio very consistently. Every day we come into work, we think, what is driving stock prices, what's happened overnight, what data has come out, and then we reflect that in the portfolio. So it's a very active portfolio. So we turn the portfolio over about 5 to 6 times a year, so highly active. So I think it's a combination of the top down, the bottom up, but then also the portfolio management process, which happens throughout the year, which is really the differentiator, I think, for our fund.
Okay, and what are the benefits of using a LIC structure for this vehicle?
I mean, the LIC structure is great. As a portfolio manager, you don't have to worry about inflows and outflows. So, quite often you've got times of stress, money comes out of your fund, which is, counterintuitive because you think markets are falling, there's great opportunities, and then you have to fund outflows. And then at tops of markets where you're trying to eliminate risk, you're having inflows and you're having to reinvest. So a LIC structure is a closed-end structure. It's a great structure for us. We can manage it without having to worry about inflows, outflows, and just concentrate on managing the money. So it's a fantastic structure.
Where are you seeing the greatest opportunities in the market at the moment?
The market at the moment we think is slightly overvalued. It's not terribly overvalued. So opportunities are few and far between, but we still think there is quite a few selected stocks which haven't participated in the rally. So Aurora is one. We think Treasury Wines will come good. I mean, they've got the China tariff announcement hopefully this month. There's quite a few opportunities, but I'd say a cautious approach is probably warranted at this point in time. So we're putting a little bit more defence in the portfolio, so using consumer staples as a sector to give us a bit more stability, and then companies with utility type properties, and Transurban is one. Telstra, we'll put a bit of Telstra into the portfolio, and using APA and gold as well as a bit of a hedge as well at the moment. So that's sort of how our current positioning is working.
So you mentioned quite a few stock examples there. Over the longer term, can you share some companies that you think have really good potential for, say, the next 5 years?
It's very much on your risk spectrum. Where do you want to go? On the high risk, you've got companies like Megaport. In the tech space, telecommunications space, so they're very much plugged into the AI revolution, as people are calling it. So we think that company has got good long-term prospects. You just got to get over the valuation currently, but if you believe in the long term, that company looks very good. If you look more back to the more stable companies, the more more industrial, cyclical companies, I think look pretty good. Like an example is Aurora. So Aurora, they're in packaging in Australia, beverages as well. They do wine and cans in Australia. And then also they've got this recent acquisition in France called Saverglass, which do high-end spirits and wine as well. We think this company can grow at a tremendous pace for the next 3 to 5 years through expansion in the US, through the Mexican Saverglass plant, which they can leverage up into the US. So we think the base business will grow, but also this new acquisition gives them a new leg. So that company looks really exciting.
And how should investors think about using this strategy within their broader portfolio?
The way I look at it is we invest in high quality companies in Australia. We are very active. So quite often people look at our top 20 and go, you've got banks and BHP and Rio, I can do that myself. But I think the way we manage money is very fluid. So every day we're trying to discover new opportunities. We're upping and down weighting stocks. We're really making every day make that money work as hard as it can. So the way it works is if you're looking for high quality companies, a good dividend stock like the WAM Leaders stock, and very, very stable performance over the history of the fund too. So we've delivered outperformance of around 400 basis points over the index for 7 years now. So I think if you're looking for that combination of highly active management, but also some outperformance in an area where a lot of people actually give up and say, I'm not going to try and beat the top 20 holdings on the ASX because it's too hard. But we think there's incredible value there.
Okay, well, thank you so much for taking us through WAM Leaders today.
No, thank you for having me.